G'day, my name is Phillip and
G'day, my name is Florence.
and we'll be talking about how externality and carbon tax are related. Externality is the uncompensated impact of one's person's actions on the well-being of the bystander. In this case, airplanes contribute to global warming. Florence, my sister, can you point to that picture there? I'll just pass it over to Florence to talk about carbon tax.
Thank you, Philip. Carbon tax. Carbon tax is a financial strategy to reduce excessive carbon emission. As in this case, as Philip mentioned, carbon pollution from airplanes. As you can see in this diagram here, excess carbon dioxide, CO2, is equal to is contributing to global warming, climate changes on a whole scale.
For the duration of each flight, amount of time and hours flown, a certain amount of exhaust enters the atmosphere. Because the exhaust creates a health risk for those who breathe the air like me, it is a major contributor to global warming. This is called a negative externality. How does this externality affect the efficiency of the market? How does that work, Martha?
Well, it works like this, Philip. If you can point to that picture on the bottom. Because the Australian government has instituted a carbon tax on the Brindabella and Albury flights, it causes the prices of seats to rise, services to be reduced, and reduces the number of flights. These are the effects of and the relationship carbon tax has with externality.
It is shown that there is a relationship between externality and carbon tax, and how this relationship has had an impact on the airline market. The significance of this situation is expressed in the way Brindabella airline responds to the carbon tax. The Australian government has successfully achieved the aim of protecting the well-being of the bystander and reducing carbon emission. The institution of a carbon tax is a solution to reduce carbon pollution. However, the airline should adjust their assets to continue their business in order to make a reasonable profit.